Hi everyone. So it's me again, Tomas Shidania, market analyst with Vestrado. So we're having the market outlook on some pairs for the week. Okay, the FX market, what to look at, what to trade. We're going to be starting with the fundamental analysis. Okay, fundamental analysis, and the first pair to look at is the XAU USD. XAU USD. Okay. Now, what does that say? For me personally, the XAU USD is a pair that I would say is mostly moved this period by fundamentals, crisis in Middle East, political uncertainties, the Russia-Ukraine crisis, and the BRICS economics. What does that mean? BRICS, countries that have decided to um, get branched out, break away from America's monopoly, okay, break away from having to store their currencies in the US dollar or reserves, so on and so forth, trying to reduce America's monopoly in the world, in the financial space. Countries like Russia, like China, like South Africa, and so on and so forth. So typically, global escalations in global tensions and BRICS economics will drive it bullish on increasing demand for gold because, of course, we know gold is a safe haven currency, while easing of such tensions could push it bearish on weak gold demand. Okay. Now, what else could also influence XAUUSD? Inflation data from the US could also influence it. Why is this important? Because last week we had very strong jobs data indicating that the rate cuts are working in the US economy, so all eyes will be on inflation data in the US. Okay, where strong data could, um, a strong, good inflation data could strengthen the US dollar across board. Okay, and perhaps drive gold to be strongly bearish, whereas poor inflation data could make it go strongly bullish. So that's fundamental analysis for XAUUSD. Now let's go into the charts and try to see what the charts are telling us. Okay, let's try to see what the charts are telling us. Good. So gold. What do we see? First off, let's look at the weekly chart. I like to start off on lower time frames, higher time frames, okay? When analyzing the market. So what do we see here? I'm going to zoom in. We see sort of an evening star telling us that the bearish move is about to start. What else? We see price traveling up um, along an ascending trend line right here, okay? Traveling along an ascending trend line. So a break of this trend line could signal strong sell signals in the future. But before then, let's look at the RSI. Look, if you take this away, if you connect the lower waves in price, connect the lower waves in price right here, and connect the same lower waves on the RSI, it tells us that price is about to have a drop down. This is negative divergence. Okay, so it tells us that a correction is imminent um, on this guy. A bearish correction is imminent. Now, that's that on the weekly chart. But I'm going to leave in now the ascending trend line. If we leave in the ascending trend line, what do we have? There you go. Now let's move over to daily chart. What does daily chart tell us? Daily is saying that, um, yeah, we have something similar to a negative divergence right here. Look, connecting here and here, we have an uptrend. But if you connect the same places right here, you see that we have a downtrend telling us that price should actually be headed downwards rather than upwards. This is daily. Daily is saying bearish. Prices should be going strongly bearish. Okay. What else do we see on the daily chart? We see something similar to the heads and shoulders pattern here. Okay. The head and shoulders pattern. There you go. So head, left shoulder, right shoulder. Okay, so mark that out. There you go. And then here, logically, the head. So what does that tell us? The head and shoulders pattern is saying that we have a neck right here. If we make this neck of the head and shoulders pattern very thick, highlight that, saying that a break of this guy, which could also coincide with the break of the ascending trend line we drew on the weekly chart, could lead us on a bearish move to the next neck right here. Okay, these are support levels. So, um, the next most likely target on this front, if it goes below this, should be this guy. There you go. Now, what else? If we decide to use our Fibonacci to assess where price should be, good. So, in the long term, for the daily chart, this is what we have. Um, Negative divergence right here. We see Fibonacci price telling us that the next target after this should be this. Okay. And then this guy right here. Next, we have this guy right here. So if we take away the Fibonacci, let's assess support levels very clearly. So we have first support level, which is the neck. Um, First support level, which is the neck, which is 2614. If it breaks past that, which also coincides with the ascending trend line, there's something else that also coincides with. Let's add that on, which is the 100-day moving average. You see that it's acting as support right there. So we have three strong support levels. One, the ascending trend line drawn on weekly chart, which is the green line. Second, 200-day moving average. Third, okay, the neck of the heads and shoulders pattern right here. So if we have that, if we have a break of the first neck, 2614, the next most likely target will be the second neck right here, 2538. Okay, now if we have a full break of that going down, then the next most likely target will be 2462, and below that 2420, below that 2300, and further till 2189. Okay, so these are support levels. Now on the flip side, if instead of um, um, breaking these major support levels, which is the neck of the heads and shoulders, which coincides with the ascending trend line right now, and the 100 MA on the daily chart, if we have perhaps an upward movement, because again, technical analysis doesn't work so much on this guy. Okay, it's really quite unreliable. It's quite unreliable. So if I if we look at lower time frames, what do we have? Let's There you go. Look, still on the daily chart, we have price locked in within a triangle. Okay, some will call this a pennant. A pennant is also some form of triangle. So if price breaks above this, let me zoom in. If price breaks above the resistance border of the triangle, the next most likely target, according to the charts, will most likely be this guy, 2724. And we should recall that 2710 is a 1-6, has been a strong level, was a strong level for 2 weeks in December. Okay, so if it breaks past that clearly, The next most likely target would be this significant swing high right here, this swing high, 2755, which is a psychological level, so two. And then above that, 2787. Okay, if it goes beyond that, then we're looking at psychological level of 2800, above that, 2900. All right, so this is gold. In the short term, you want to go scalping trades. Something is happening right here in the short term. Let's take away these lines. In the short term, again, resistance levels for gold, possible resistance levels, 2716.0, 2755.14, and 2787.2. Okay. Now, in the short term, for those who are looking for intraday or scalping positions, let's try to give something here. There you go. Look, on the 1 hour chart, we have this guy traveling ascending trend line. And it looks as though it has just broken past it or it's struggling. There you go. You see that? If I zoom in, you can see that again more clearly. Moving along an ascending trend line very nicely. And it seems that it's not just an ascending trend line, it looks like it's in a channel, an ascending channel. So in the short term, scalpers could target the borders of the channel. This is the support border and this is the resistance border, trading between the borders. It's not so wide. So halfway, if you're an extreme scalper, you could also look at the markets this way. Draw the halfway line, okay, connecting the swing highs along the halfway path, okay, scalp to the halfway level and back, or if it breaks past it, the next most likely target will be the upper border right here. So this is what's going to happen, or we predict will happen in the short term for XAUUSD. And if it breaks past that going down, go back to the reference for the daily chart that we gave. If it breaks past that, so we're having something like this. If it breaks that going down, we already talked about this. The next most likely target would be the neck, which we talked about. Okay, this first neck right here. Okay, we said if it breaks past that, our first neck right here will be the most likely target, 2614. Okay, I take that again. If we have a break of the support border of the ascending channel on the 1 hour chart, the next most likely target going down for short-term traders, okay, would be the first neck level of 2614. Below that will be 2538, and then use that as a reference going forward. If it keeps going down, if it keeps heading up, we already talked about that. The next most likely target going up would be resistance board levels talked about earlier. So this is XAUUSD. Again, technicals for me on this guy are tricky. Okay, I don't want to stay too long on this guy because it is mostly driven by um, fundamentals, global escalations, BRICS economics, and so on and so forth. It's a safe haven currency. Okay, so that's that about gold. Let's move on to the next um, pair to talk about here, the USD CHF. So what's the technical and the fundamental analysis on USD CHF? USD CHF, the focus will be on dollar, the US dollar here. Why? Because some more significant news is coming out of the American economy. Now, strong jobs data last week made it so that all eyes are on inflation data right now. Why? Because the Federal Reserve Bank cut interest rates and are trying to assess the effect of the interest rate cuts by looking at the jobs data. Okay, how companies, small and big businesses are doing all across board. And good inflation data often will send the USD CHF strongly bullish. Now, that's the wrong one there. Good inflation data will send it bullish. Yes. Yeah. So strong jobs data are the focus right now for the US economy. Just to gauge how well the American interest rate cuts have been going, or the US Federal Reserve rate cuts, okay, are influencing the American economies. So all eyes will be on inflation data such as CPI or the PPI. Good inflation data will send this pair strongly bullish, very, very strongly bullish. Okay, based on strength of the US dollar, because it would mean that um, the target of the Federal Reserve Bank is being hit. Okay, speaks well for the American economy, you know, and then disappointing inflation data from the US will probably also drive it um, bearish. Okay, the other way. So let's pay attention to this. Now, this is fundamental analysis on this guy. Let's go into um, the charts, technical analysis, and see what it has for us. What does it have in store for us? Okay, let's start with the weekly chart as usual. So what do we see here? We start there with the RSI. Good. We see that price is currently above the 200 MA. This is the 200 moving average. Let me try to plot that afresh. Mhm. So give the 200 MA the red color. It's currently above that, telling us that the bullish power is quite strong. So, what else do we see? The bulls are strong on weekly chart. On daily chart, what's present? Here you go. Look, price open, price open. If you connect, price open. Okay. If you connect the swing highs, but on the RSI, it's straight. That's negative divergence. That there should be a correction to the downside on the daily chart. So the daily chart is telling us that there's negative divergence, okay, on the daily chart, and we should have a drop very soon. What else? On the weekly chart, we see that it's approaching the 70 water mark, looking at the overbought level. On daily chart, it's currently overbought. All right, so that's that on the higher time frame. Now, what should we expect on this guy? There's something else, okay? We take this away. Good. So we see on the 4 hour chart, what do we see? 4 hour chart, you connect the highs on price, the swing highs. If we check on the RSI, also negative divergence, telling us that a correction is also imminent in price, a possible bearish move. But then again, no matter what it says, we should always try to look at price from both angles, uh, possible movements from both angles. So, what do we have? On the 1 hour chart, something is happening right here. Look, there seems to be an ascending trend line. Okay. Price broke past it, but went back into it, went back above it again. Let's see if we have a channel here. Let's see if we have a channel. There you go. We seem to also have an ascending trend line, hence something similar to a channel. Okay, right here on USD CHF. So we have hit the upper border. The next most likely target could be the lower border right here. If it goes above that, if price goes above that, what should we expect? We should expect um, the next upper border, the next channel. There's another channel right here projecting upwards. So you should expect the target level. Yeah, the upper border of the channel right here. Okay. So the target for me will be first target. This is where we are. If it breaks past the upper border, the next most likely target will be 9225. Okay. But we'll get to that in a bit. But right now, just keep in mind that price is moving along an ascending channel. Okay. If it breaks below that, the next most likely target for me will be the 200-day moving average right here. Okay. 200-day moving average 0.9098. Psychological level of 0.9100. Okay. What else do we see? So in the long term, let's get our support and resistance levels in the long term. If we use the weekly chart first off as reference, we use the weekly chart first off as reference. Get our 200-day moving average right there. Good. The next most likely target going above the 200 MA should be this guy right here, 0.9229 or 9330. Let's put it at 30. Okay. And the next resistance level after that, if it breaks past it, should be this common significant swing high right here, 9356, which is also a somewhat psychological level. And this also coincides with um, the high on the 1 hour chart. Coincides with the high on the 1 hour chart. Here. So if we have this, if it goes above the first resistance border, 9226. Yeah. We should coincide with somewhere around the upper border, okay, of the channel. So that's in the longer term, okay. Above that, just like we just drew, the next target should be 9300, okay, 9300, or above that 9356, which we indicated on 0.9356, which we indicated on the daily, the weekly chart. Okay, in the shorter term, what do we have in the short term? For intraday traders and scalpers alike, what do we have? So we see price moving along an ascending trend line. We've established that. Now, what else? Look, so there's something happening right here. Look at price. If I draw a horizontal line right here, trying to map out key levels of its movement, there you go. Same thing here. We see that price is currently moving within a rectangle. So a break above that rectangle, the resistance border, could see price head upwards. Okay, a break below it could see price head downwards to the next, to the descending, sorry, the support border of the channel. Okay, so I'll put my target level as first target level right here, the previous significant swing high, 0.9130. Okay, a break below that, okay, could see price head to, let's use our Fibonacci for intraday traders and scalpers alike. A break below that could see price head to 0.9104 using our Fibonacci. Okay, using our Fibonacci, and then the next target level for that will be 0.9085. Okay, if you have a break below that. Now, um, that's that. In the longer term, we talked about this already. Break of the upper border of the channel. Okay, 9229 resistance levels 9300 and 0.9356 as resistance levels going up. So what's my take on this guy? Those are the conditions on which I'm going to buy or sell. Okay, I'm neither I'm bullish because it's way above the 200 MA right now. Okay, and the US dollar is doing well across all pairs. The US dollar index is doing strongly, very well. So I favor bullish positions on the USD CHF. If I'm doing bearish positions, I'm going to do it very, very briefly. Okay. Okay. So that's that for the USD CHF. Now let's try to look at the USD yen, the USD yen, USD JPY. What's the fundamentals on this guy? So same thing, strong jobs data puts all eyes on inflation data such as CPI or PPI, just like they with the USD CHF. And then right now we have uncertainty surrounding the Bank of Japan's rate hike expectations. Okay. Within other expectations that the Federal Reserve Bank will slow down rate cuts in 2025. Now, if Japan, the fact that Japan will hike rates is not so clear. Okay. The issue of them hiking rates right now is not clear. All right. But keep something in mind, which is hawkish comments from the BOJ. In the past 7 to 8 months, it's been known that we've got hawkish comments coming from the Bank of Japan to influence the Japanese yen. So keep your eyes on that. Okay. So, and also the inflation data from the US. Now, on this guy, my money is on high probability trades. Okay. High probability trades in this guy for technical analysis. Um, Technical analysis carries the day for me for the US dollar Japanese yen. Let me show you why. Let's look at the chart. USD JPY. Look here. Good. We have negative divergence, okay, on the daily chart. Yeah, look. If you add on your RSI, this is your RSI, okay, right here. But we don't need that. We need just one. There are two RSIs. We need just one. Look at price. If you connect the highs on price and you connect the same highs on the RSI on the daily chart, you have negative divergence. Negative divergence. Telling us that price will most likely do what? Head downwards. Now, the take for me out of this is not from the daily chart, but from the the 4 hour chart. Because on the 4 hour chart, we have the same negative divergence. Look, on price, headed up, on the RSI, headed down. Same thing, negative divergence on the 4 hour chart, telling us that the correction is imminent. Okay, that's that. What else should we expect? Look at the 1 hour chart. There's something happening here. It looks as though also on 4 hour chart, price is moving along an ascending trend line. So if I take away the RSI and we focus on this ascending trend line, what do we get? Now, intraday traders and scalpers alike can trade between the borders of this ascending channel. Okay, up and down, up and down. If you're an extreme scalper, you can take advantage of trading of the gap between, because it's 4 hour chart, so the distance is significant enough. You can trade halfway. The break of this could lead to this, the upper border. Okay, going down, break of this could lead to this. Scalping in between. Now, if price breaks the support border, okay, of the ascending channel, there's something else I want to show you. Something else to look at here. Let's look at our moving averages. There you go. You see price acting as strong support right here. So if there's a break of the ascending trend line, the support border of the ascending channel, and it's the 100 MA, the 100 day moving average, I'll consider a sell to the first target here being 156 0.27. Okay, 156.27. That's my first target. I'm going to call that the major neck, the major support level for me. And then below that, 155.96. 155.96. Okay, so that a break below that could see price head nicely downwards. So the next significant swing low for a target level here um, is at 154.46, but that's too far. So to properly map out and get target levels, let's see if Fibonacci will give us closer targets. Let's see if Fibonacci will give us closer reference points. There you go. So Fibonacci is saying there's a target level here at 38.2. Let's try to draw that and make that dashed lines. Okay. So a break beyond 155.96 could see price head to 155.24. And a break below that could see price head to 154.46. Okay. A break further below that could see price head to 154.00 psychological level. Okay. Okay. And below that, it would have price head to 153.00. Let's delete the Fibonacci and see what happens if price happens to break its boundaries. If it breaks its boundaries and heads up, breaking its current high, if it breaks its current significant swing high right here, okay, the next most likely target for me will be this guy right here. Yeah, which is at 160.16. But to be safe, psychological level of 160.00. Okay. And a break above that could see price head to 161.00. Another psychological level, 161.00 and 161.88. Okay. If it goes beyond that, of course, the psychological level above that. So these are the targets for me in the longer term. In the shorter term, I prefer to trade between the channel borders. Okay, up and down, up and down. A break below that for me would see price head to this, a short-term target. Let's see if we have shorter targets on the 1 hour chart. Nothing too peculiar to note. Okay. Um, so this is that for me on the USD JPY. Now, I want to slam on something else. Call it a bonus. Let's look at BTC USD. Let's look at BTC USD. Beautiful. This guy right now has formed the heads and shoulders pattern. Head, left shoulder, right shoulder. Let's mark that. Crypto signal, ladies and gentlemen. Okay, marking it is quite kind of hard. So left head, left shoulder, right shoulder. Now we're going to call this the neck. Give that a thick horizontal line there. Differentiate that. There you go. So a break below that, using our Fibonacci, could see price drop. This guy is looking strongly bearish. It looks like it's about to correct itself. Next target level will be 87.128, and below that could go as low as 80,609. Ladies and gentlemen, now what does RSI say for the daily chart on Bitcoin, BTC USD? It's saying that there should be a correction in price. There you go. Negative divergence. On the same level, you see that it's straight right here. So on BTC USD, I'm strongly bearish. Okay. If there's a clear break of 91529, I'm going to sell to my next most likely target 87128. All right. Right now, the US dollar is doing very good. So you might want to consider sell positions. I'm bearish on this guy on those conditions. But then again, this is Bitcoin. It's very volatile. If something pops up, some news or something to take it out of the bearish range, the next most likely target going up, okay, would be this guy right here, the first level. Excuse me. 101.86. Okay. And if it goes beyond that, of course, 107,456, 107,456, and above that, perhaps psychological level of 110,000. Okay. Keep that in mind. For now, though, it looks trapped in between um, a rectangle, but formed in as though it's about to drop because we have the heads and shoulders pattern formed right there with evening stars formed back to back. We have bearish engulfing pattern right here. Evening star, okay. Um, and then you could say, okay, maybe tweezer tops right here. Okay, three of which form heads and shoulders. Okay, and right now we're watching for a clear break of this level, this neck level of the heads and shoulders pattern to go on a sell. So this concludes the weekly analysis for these three pairs. I hope this was insightful. Um, Again, with Vestrado, I'm a Tomashi Daniel, Forex mentor, market analyst. Okay, in Vestrado. Thank you, everyone. I'll see you next week for the next market analysis. Have a good one. Bye bye.